By now, most everybody knows 2017 was a good year to own stocks and stock funds. So how good was the year? Well, I'll leave that answer up to Larry David from the TV show Curb Your Enthusiasm.
Pretty good.
So let's put some numbers to this pretty good year. The S&P 500 index was up nearly 22%. The tech-heavy NASDAQ composite was up 28%. Think of Amazon, Netflix, and Apple. And international shares posted an impressive 25% gain. Lagging a bit, but still posting respectable returns, were large cap value stocks rising 14% on the year. The impressive gains for stocks in 2017 were the result of an earnings-driven bull market fueled by global economic growth. In fact, companies making up the S&P 500 index saw earnings grow 10% in 2017. Given this growth rate, it is no wonder stock prices did so well throughout the year. We have been getting more questions than usual about the bond market, so following are a few important takeaways. The Federal Reserve has been raising short-term interest rates, but intermediate and long-term rates have been unchanged. This is also known as the flattening of the yield curve, and this phenomenon can be a positive sign for stocks in the near term. The Federal Reserve has indicated 3 interest rate hikes are expected in 2018. Anything beyond that will likely spell trouble for stocks. So what can investors expect from stocks in 2018? For starters, investors can expect a lot more volatility and at least one 5 to 10% correction during the year. In 2017, the S&P 500 index never declined more than 3%. This was very unusual and not likely to happen in 2018. The U.S. dollar was down 9.5% in 2017, which helped U.S. companies doing business overseas. In the 9 occasions when the U.S. dollar declined more than 9%, the stock market has ended higher the following year in every case. We expect gains in 2018 for the S&P 500 index of between 6 and 12%, as corporate profits are likely to be strong and the benefits of tax reform will be meaningful. It is important to note we expect much of the forecasted gains in 2018 to be generated in the first half of the year. Legendary investor Sir John Templeton famously said, "Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria." In our opinion, markets have reached the optimism stage, which may continue for many months ahead. However, HM Capital Management will be sure to provide guidance when we believe the euphoria stage has taken hold. From the HM Capital Management team, thank you for watching.